So the very entities and quote unquote experts that you are waiting on to tell you that crypto is a good thing or blockchain is a technology that you should be keeping your eye on and investing in, those same entities don't give you those opinions, don't give you that advice or those suggestions. And they rant and rave about, well, look at the crypto, look at FTX, look at all those things that have gone bankrupt, all the shady things that have happening, the lack of transparency in those entities. Meanwhile, those entities themselves, the FTXs and whatnot, actually run exactly how the old system works. I want to share a new story that will highlight way better than I could ever articulate what these central banks, what these people of authority are up to, and how they don't even handle their own affairs very well. And yet we're all waiting here, or you may be all waiting here for them to guide you and find a path for you in an age that's completely changed and they're not suited for. So let's jump into this here. Swiss National Bank. So this is the central bank of Switzerland. It'll record $143 billion loss. Look at that again, okay? Because this is astounding here. $143 billion loss. That's the central bank. They're supposed to be good with money. They're supposed to be able to handle their finances if they can give you guidance on yours. All of us. How in the world can they have a $143 billion loss? And how are we not even aware of it? So let's go through this. And this was a great LinkedIn post here by Andrew Axelrod. So he's like, 143 billion, central bank loses 18% of gross domestic product. Here's why you own nothing. Again, $143 billion, obviously that's a large amount of money. But when you put that to GDP perspective, 18% of the entire country's GDP, that's the loss that they've accrued over the last year or so. This is a central bank. All right, so the Swiss National Bank, SNB, posted its largest loss in 116 years, which is 143 billion. In GDP terms, that's 18% of the Swiss economy. Most of the loss stems from last year's collapse in equities, which made up 25% of the S&P's Q3 2022 balance sheet. So it says here, yep, the S&P is sitting on a bunch of stocks that turned bad. So wait, hold on. I didn't even realize this. Central banks are invested in the stock market. Okay. So which stocks? Well, we don't know exactly because the S&P doesn't like to disclose that. But as an institutional investment manager, the S&P has to submit a quarterly 13F form with the SEC, just like any ordinary hedge fund. So that's how we know that its largest holdings include Apple, Amazon, Microsoft, and Tesla. Okay, so just basic GGen stuff. But why is a central bank YOLOing the market? That's a great question. First, I'm not sure if you guys are aware of that. I certainly wasn't. But for them, a central bank to be able to invest in other entities like Apple and whatnot, I mean, you do hear of that obviously when they're buying bonds and doing certain things. But to invest straight into equities, interesting. So it makes you wonder what else happens under the hood or behind closed doors that we're not privy to. This is why blockchain is so great. If entities are running on a blockchain, not everything is visible. Of course not, if they decide not to. But the ability to do so is there. And that's key here. All right, so okay, let's go on. So the Swiss economy is vibrant and its products in high demand internationally. That means a strong Swiss franc, CHF for short, the domestic currency those popular goods are denominated in. Okay, so Swiss economy is doing well. Their native currency is doing well. So things should be doing great in Swiss, right? In Switzerland. Nope. What does the Swiss National Bank do? They actually debase the currency, meaning they make it less valuable. They make it worth less. And why do they do that? So they make it under this whole pretext that We need to protect our exports. And if the currency is too valuable, is too high, it's going to be difficult for those who are importing goods from Switzerland. So we need to weaken the currency so that it's more attractive to those outside the country who want Swiss goods and services. That's the kind of the lie that they tell everybody here, why they're doing what they're doing. So it says that the SNB has to keep pace with the rapid money printing of Switzerland's main trading partners to remain competitive. He goes, let's pause here for a second. No matter how productive and hardworking the Swiss people become, the SNB feels compelled to offset a rising Swiss currency. So think about that for a second. The economy is doing well. The currency was doing well, or is doing well. People are working hard. They're being innovative. They're being creative. They're, taking the economy and the entire Swiss culture, the entire Swiss economy itself to new levels. But what's happening is their currency is actually being devalued by the very people who should be supporting them. So that's crazy, right? It says it will therefore print, it being the SNB here, it will therefore print Swiss currency and bring it into circulation by trading the actual valuable currency for desirable assets like stocks and gold. This means that SNB is one of the world's largest hedge funds, and its margin account for collateral calls is the Swiss economy. That's pretty heavy. I'm not going to get into calls and options and all of that. Okay. But basically they're screwing over the Swiss people by devaluing a currency that actually is valuable. And, as the economy does better, it's a better margin account basically for SNB here. Okay. So they'll go out. Well, maybe even let's go back here. What does he say? He says more of a hamster wheel. Okay. In other words, the reward for Swiss people's ingenuity and industriousness is to have the fruits of their labor siphoned off and used to fatten the SNB's expanding balance sheet. That's what it's doing. So it's the definition of the hamster wheel. People work harder. They do better. It fattens the SNB's balance sheet, which devalues it for those working harder and smarter, which means that they have to work even harder and smarter and be more, creative, which then fattens the SNB. So it's just a nasty hamster wheel. And it says other countries do this as well, usually through sovereign wealth funds, which are used to launder the ever-inflating money supply. So this is not restricted only to Switzerland, only to countries that you don't live in. This happens in every country across the globe. So they'll go out to market and buy real estate. So these central banks are going out and buying real estate. They're buying companies, they're buying commodities and sovereign debt, et cetera, et cetera. So he's like, that's right. You're competing for scarce assets. When we talk about real estate, we talk about entities. These aren't printable, right? There's a limited supply of them. And they're using an unlimited supply, print at will currency to buy these scarce assets. So you and I are competing with an entity, central banks, governments, whatever it is, that have obviously much deeper pockets. If they can print at will, you and I only get the money that we earn based on the work that we do. We can't go and print something at will and go use that. So that's the competition that we're facing to buy hard assets or scarce assets. And so he goes on to say, good luck saving for retirement. So if you are working hard, you're working smart, and you're piling up that currency in your bank account for saving retirement, but they're devaluing the very money that you have saved up for your retirement. So it's worth even less when you come out and expect now to live with that money. Okay. So, and he goes, the infinity money printer. I mean, that's a real thing, real thing. Okay. Like I mentioned before. So we talk about blockchain, we talk about crypto. And the very first thing I said in the beginning was that the very people that you're looking for to guide you and give you the okay that, hey, this is an asset class, this being crypto or blockchain, Web3, is suitable for you. Why would they do that? They've got a beautiful system laid out right now. They print money at will. You work hard for that money that is worth less each and every day. They use that less valued paper and buy hard-earned assets, which are scarce, in direct competition with you, which means that you have to work that much harder in order to save up enough to beat the amount of value that your paper money is actually losing in value. So it's a crazy negative cycle. Negative for us, positive for them. So when we talk about crypto, we talk about blockchain, and I don't want to keep saying those two together because crypto is the incentive to use on blockchain to use for blockchain. And then you mix Web3 in there, which is where we own our own data, right? We own our own information. All three of these things allow the average person to escape that hamster wheel, to actually own assets. Bitcoin being scarce, the most stable, only 21 million. So imagine there was only 21 million paper money that they could print. That's not the case, right? They can do it at will. They do however they want. But there's only 21 million Bitcoin. And that is something you and I could go and buy today. $10, $50, $100. It doesn't matter. They can't take that away from us if it's in our cold wallet. So understand that those you are looking to guide you, those you are looking to give you the nod and say, you know what, this whole crypto thing, we think it's a good idea. Not a chance. Absolutely no chance that's going to happen. Not anytime soon until they figure out how they can make their own money. And for anyone who looks sideways or laughs at, well, look at FTX went bankrupt, and look at this went bankrupt, and look at Celsius. All those guys ran the exact same way that Web2 companies today run. No different. But they're not getting bailed out. Look at the central bank, $143 billion loss. What entity could survive that? Do you think they're going to go bankrupt? They're just going to cease to exist? No. They're going to continue printing some money, getting some help, doing all that. So the rules aren't the same for everybody. And I want to impress that upon you.